I want to talk a bit about inflation, Jim. Morgan Stanley today.
So I think we are going to see further inflation, Scott, because I think the Federal Reserve is going to remain anchored.
Hovering over all of this right now is the fear of inflation.
After the monster COVID surge, now there is another surge. This time, it's in prices that have compounded.
The Bank of England left its monetary policy unchanged, but warned of a more pronounced period of above-target inflation.
So a little over a month ago, I made a video titled, Can America Go Bankrupt? When it comes back to that initial question of, can America ever really go bankrupt? And I guess the simple answer is, well, no, because we can just continue to print money out of and make sure that we don't actually hit that. So let's recap some of the things that we found in that video. Just how much is America in debt? Well, a little bit over $28 trillion in debt. But we also have this thing called unfunded liability. So our total debt picture is just short of $86 trillion. Now, to better visualize this amount, we talked about giving each dollar and equating that to a second. And we said that 1 million seconds equals 11 days, 13 hours, 46 minutes, and 40 seconds. Almost 2 weeks ago, right? We said that 1 billion seconds is a little over 31 years. That takes us back to 1991. Now we said that 1 trillion seconds, that is equating to 31,688 years. Now 1 trillion is a big number, and that's why we kind of took back, because it's hard to visualize how big these numbers really are. So that means if we were to take 1 second and we used the $86 trillion in debt, $1 for every second would take us back to almost 3 million years. Now, one last fun way of looking at this, that if we want to put this all in distance measurements, and we said that $1 equals 1 mile, we could take a round trip from Earth, fly all the way to Pluto and back. We could do that round trip 136 times for every $1 trillion. Now, that, of course, that is assuming that Pluto is still a planet. And so with that as a background, let's take a look at some of the things that America is doing to hopefully correct this problem. Or let's talk about some of the ongoing policies that are currently being talked about and passed in legislation that will affect you today, but also you and your family in the future. So what's the risk of having debt, especially debt at this type of levels? The short answer is...
I want to talk a bit about inflation, Jim.
Now, what is inflation? And briefly, it's the rate at which the value of a currency is falling. And while at the same time, the general level of prices in goods and services is rising. The old adage is true here, a dollar today is worth more than a dollar tomorrow. Now, I feel like sometimes it's an easy target, but let's look at an extreme case, Venezuela.
No me han dicho nada. No tengo información de él, no sé nada.
The economic conditions there have been so bad that people are literally rifling through trash to find food. They can't find food on the shelves. They don't even have the money to buy things. In fact, the dollar is worth so little that now people are making it into belts and hats and purses and backpacks and all that kind of stuff. The financial conditions were so poor that in 2018, the Venezuela government started producing $1 million bills. Now, the very next year, Venezuela breached a staggering annual inflation rate of 300,000%. Now, as you can imagine, when a $1 million note has a purchasing power of 32 cents in American money, math can get really hard. All those zeros don't even fit on a calculator screen, and sometimes you have to swipe the card multiple times just to buy a loaf of bread, assuming that there actually is any loaf of bread there to buy at the store.
Once Latin America's wealthiest country, the conflict has plunged Venezuela into deep economic turmoil. Hyperinflation of their currency is expected to reach 10 million% this year, making money almost worthless.
Now, when we look at it, a lot of these zeros is hard to calculate. When I'm buying things for $50 million or whatever that count may be, it doesn't even fit in a calculator. And so the solution to this was Venezuela said, hey, why don't we just cut off 6 zeros? That was their solution in July. Now, before you think I'm kind of joking with this, they actually did this back in 2018 where they cut off 5 zeros. And again, as we talked about, it didn't really work for them. Now, thankfully, the US is not quite at this level yet. Over the last 12 months, the all items index increased 5% before seasonal adjustments. This is the largest 12-month increase since the 5.4% increase for the period ending August 2008. Now, of course, we've all seen the memes and we've all seen examples of the price of gas, of oil, of lumber, everything else increasing at staggering rates.
In the grocery store, at the gas pump, on the car lot, prices keep rising.
Lumber prices could be at a new record high by the end of the week.
From May to June, inflation jumping nearly 1%. And compared to a year ago, up 5.5%, the largest increase in almost 13 years.
The Bloomberg Commodity Spot Index actually said that commodities have jumped roughly 60% over the past year. Now, of course, this all comes with a silver lining, of course, right? So with all this inflation, we're going to be all right? I mean, we're going to have higher wages, so that should be good, right? I mean, you see articles like this, and the problem is that these can be very misleading. You see, here's the actual headline for the article that this picture refers back to. And when it comes to forecasting for 2022, the picture doesn't look much better either. You see that reports after reports are saying that yes, while wages are going up, that they're not going to outpace the pace of inflation. You as a consumer, as a family, as an individual, still have less purchasing power. Therefore, it's a net loss for you and yours. Now, what we have kind of brewing here in America is really a true perfect storm in the global market. I mean, labor shortages are there, yes. Supply chain shortages are there. Delays in products and chips for new cars and everything. These all lead to a lower velocity of money. Now, velocity of money is the rate at which money changes hands in an economy. I mean, higher rates of velocity of money means that a dollar bill will go from me to you at your business and your restaurant, wherever, at which then you'll spend it elsewhere, and then down the line and so forth it goes. Now, we are at the lowest levels of velocity of money in decades. In fact, it's the lowest in record that I can find in recent history. So with the CPI and prices rising, and with the war on talent and the labor shortages across the globe, with the supply chains disruptions and delays, it seems like the only answer to correct all this is to make drastic cuts to government spending, right? Well, not so fast. Earlier this week, the House actually passed a $3.5 trillion budget spending plan.
3/5 of the senators duly chosen and sworn having voted in the affirmative, the motion is agreed to.
And this is not actually to replace, this is in addition to a potential $6 trillion spending bill. In fact, the headline from May 28th of Reuters stated that money is cheap, let's spend it. The White House $6 trillion budget message. Now remember, if we go back to my last video, we clarified that last year we raised $3.42 trillion in taxes and revenue at the federal level. And we spent $6.55 trillion, or a deficit of $3.13 trillion in just that 1 year. Now, to be fair, there are some great ideas proposed in the spending bill. I mean, according to this New York Times article, the spending bill looks to do a lot. I mean, it looks to upgrade the nation's infrastructure, like roads and water pipes and broadband internet and electrical vehicle charging stations. I mean, it looks to expand the social safety net for Americans. I mean, things like affordable childcare, universal pre-K, national paid leave program, and also increase the defense spending. So while there are some good things involved in these bills, the question always comes back was, how do you pay for this? I mean, you could raise taxes on corporations and high income earners, and historically this proves to be really ineffective. And you could promise to drive job growth. So far, that really hasn't come to fruition yet. Recent studies have shown otherwise, that these two measures don't really drive when you increase spending at this type of level. Look, whether you agree with the things in the budget proposal or not, I don't think it's wise to propose a budget that, according to the administration's own Congressional Budget Office, predicts increased budgets for debt. I mean, at these rates, we have not seen since World War II. And as always, best wishes, be awesome, take care.